Alright, what's up traders? Happy Sunday. So, time for the weekly watch list video, and this will be the watch list for the week of January 24th. But before we get diving in, I hope you all had a good weekend. I don't know if you're all football fans, but there's been some great football this weekend. And we got the Bills on here right now. So, taking a little break from being the couch potato, and time to dive into the charts here. I'll jump right to it. I'm looking to short the market. Pretty much my game plan right now. So we'll dive in here, take a look at the futures, but I think the party is over. And the party being the crack-infused rally that we've had since April of 2020. So from the monthly charts down, there's just a lot of things unfolding here, structurally and momentum-wise, that have me thinking the path of least resistance, at least for the shorter term here, is going to be to the downside. So we'll take a look here at the futures, but before we do, keep in mind we're going to hear from JP and the boys, the Fed, on Wednesday, the 26th. So, shall not be a dull week. But your S&P 500, you're up about 0.5% here. It's about 7:30 p.m. Eastern. Yeah, so cute bounce here. I think there's the potential, for a pretty strong bounce this week. Everyone and their mom got short last week, pretty much, which doesn't mean we don't continue to roll over. There is that potential for that kind of margin call Monday type action. But I do think we could bounce here. To just basically slice through the 200 SMA, this is where your institutions are basically, quote unquote, supposed to step in. The buy programs, so to say. This is where they're supposed to step in. No one's stepping in last Friday. You slice through that like butter. But your S&P's up about 0.5% here. The Q's up about 0.7%. And the Q's look like death. I want to short the Q's. And it's almost like the 200 SMA is just non-existent. But you got a decent bounce there. We did take profits last week on a short on the IWM. And we're going to do that again, ideally. Small caps up about 0.5%. And then last but not least here, or maybe least, the Dow, which ain't looking too hot either. Dow's up about 1/3%, right? So from, like I said, top to bottom here. If you look at the monthly chart for the S&P 500, basically the move that we've been trading for the last year and a half has been this monthly squeeze. So we build up energy in that big old whopping monthly squeeze. We release the energy. Market basically just, it's like non-stop crack cocaine. And now we're losing momentum. So basically the squeeze is done. And when you lose momentum and you start to trade under your 8 EMA, typically, not always, but typically, you're going to get a reversion to the mean. And if we think in terms of, the magnitude of this move, a reversion to the monthly 21 EMA, that's nothing, right? That's just normal ebbs and flows of the market. So keep this in mind, right? From a bigger picture perspective here, I think the S&P and the QQQ, shorter term, they got another 6 to 8% downside. That's just a pullback to the monthly 21. Meaning it could be a great buying opportunity, or it could mean there's plenty more downside. But I think just, shorter term focus here into February, into March. Big squeeze fires, big squeeze loses momentum. If that's a daily chart or a 30-minute chart, the higher probability move to come is the pullback to the 21. So the same rules, in my opinion, they apply here to, the monthly chart. So if you look at the SPY, my short-term target here to the downside is about $400, which is just about 9% under the 9% under Friday's close. And then for the QQQ here, my target is about 325, 330. That's about 6 or 7% below Friday's closing price. So that's a target that I'm working here in the short term. And again, this is just kind of, for me in my trading, it's got nothing to do with the news. And don't get me wrong, the Fed, it's a huge part of this right now. It's certainly a huge part of it, but just from a structure standpoint, a trend, an ebbs and flows kind of point of view, it kind of makes complete sense. Big ass monthly squeeze gives you one hell of a move off the 21. Now that the squeeze is over, we're probably coming back home. So to me, a move to the 21 here makes a lot of sense. Now, are there still a few spots in this market to be bullish? If anything, I think you keep an eye on energy here, pulling back to the daily 21. Energy right now is basically your only relative strength in your leadership as we go sector to sector. So you got names like, Chevron. Keep in mind, they got earnings coming up, so that's a whole nother component of this market we'll talk about in a minute here, earnings. But you have names like Chevron, names like ExxonMobil. Let's check out EOG here. This might be one of the only spots poised to do well here given the current environment. So certainly keep an eye on energy, but I think more interesting here is gold. So if you look at GLD, we'll clean this up here real quick. But for GLD, you basically got a giant quadruple squeeze right now. It starts here on the monthly chart. And then you have your 3-day squeeze, you have your weekly squeeze, there's probably a 2-day, and there's a daily. So what I'm looking for here early this coming week, ideally, a little bit of a dip, right? Just a little bit of a dip. And then I'm trying to build a swing position here for, March, April expiration, with the idea that eventually the daily squeeze fires, and that triggers the 3-day, that triggers the weekly. I'd be looking for a move in the shorter term up to about 180. Given the length of the consolidation and given the fact that it's your monthly and your weekly and your 3-day and your daily, it's basically a total squeeze fest. Not to get too far ahead of ourselves here, but this kind of structure could be the beginning of a push back towards the all-time highs. So I think the easiest trade here, is not too much premium on GLD. I think you go to March, April expiration, maybe just buy some in-the-money calls. And then as you start to get a move in your favor, take consideration to using a trailing stop. Could be your weekly AEMA. There's a few different ways you could play around with it. But in terms of, in this interesting market of ours, if you're looking to get long, I think energy might have a fighting chance here. So that's pretty interesting pulling back to the 21. Structurally, though, I'm a bit more interested in gold just because of all the squeezes. But another component of this market is if we don't got enough on our plate right now is earnings. So, I think we've seen a lot of the COVID stocks, right? The stay-at-home shit, like Zoom and Peloton and Pinterest. They're all basically back where they were pre-COVID. So you look at a weekly chart here. Pre-COVID, Zoom's trading for about 140, 150. We're back to 140, 150. Peloton before COVID is just a measly, poor little $20 stock. Has one hell of a journey up to 170. And you're back here to $20. Names like Pinterest. Pre-COVID, you're hanging out here around, $20. We're back to 30. There's DocuSign. So we've seen this retracement back to the pre-COVID levels for a lot of these quote-unquote Corona stocks. In terms of the big boys, right, your big FANG stocks, etc., Netflix has earnings last week. They get totally biffed. Pre-COVID, here's Netflix trading for about 370, 380. And here we are again. So Netflix basically wipes out, what's this? Not quite 2 years, but let's just call it just about 2 years of trend, 2 years of progress. It wipes it out here in, basically a month. So I'm not saying Amazon, Apple, Facebook, Google, I'm not saying the rest of the big FANG stocks are going to collapse after earnings and head back to where they were trading pre-COVID. But just keep in mind, this is kind of, I guess the easiest way to look at it is, it's back to reality. And Sam Shames from the options room, he does the Friday videos over here, and he had a great Friday video, like really good video, just kind of, offering a few different analogies as to what's going on here. So if you're in the simpler options room, definitely check out Sam's Friday video. But here's the way I'll explain it. Basically, if you start pumping yourself full of steroids, and for 5, 6, 7, 8, 9, 10, 12 months, you're just juicing, right? You're juicing like freaking crazy. You're going to get stronger, right? You're going to be walking in the gym just tossing around weight, like it's nothing. As soon as you jump off the juice, and mind you, I'm not speaking from experience, but as soon as you jump off the juice, you're going to lose all that. Just kind of look at your current market as that's the situation. We've just been straight, Barry Bonds. Just needle to the ass cheek juice in here, and now we're coming off the stuff, right? We're coming off the cycle, so to say. Just going to be a lot of stuff coming back to reality. So again, that's not saying, hey, here comes Amazon down to pre-COVID, here comes Google, Facebook. Just keep in mind that's the environment we're in. We started doing some really hardcore drugs back here in March, April of 2020, and now we're weaning off those drugs. Right? Our supply is running a bit low. We're coming down. So from top to bottom, there's a few things, structurally, momentum-wise, it kind of had me thinking here, I want to short this market. So we did have a short last week in the small caps, and our target here was just about 200. So we're getting short back on the 10th or the 11th over here. Pretty textbook short. So we're extended right now, obviously. So as much as I think there's a lot more downside to come in the short term, we're pretty extended. I do think there could be a pretty solid bounce. Just keep in mind, it's not going to be the same bounce you had for the last 2 years. Meaning you can get long for the quick bounce, and you can try to sell a put credit spread or buy some calls. Try to make it short and sweet. I don't think you want to load the boat here with the expectation everything's going to be just fine. There's a shitload of problems right now. The charts that I have to fix here to want to get focus on the long side again. But we are extended, and if you look at the put call ratio here, massive spike. So basically everyone and their mama is getting short right now. So there is the potential, and I do think it could happen. You get a little bit of a short squeeze here. I don't think it really changes anything, and I think if it does unfold, it could be the perfect short opportunity. And of course, we could just gap down tomorrow, and that would leave me here in the dust. But the game plan will be if we can get a strong bounce this week, and a strong bounce could be back up to, your daily 8 EMA. I would love a bounce back up to the daily 21, but generally speaking, I'm looking for a strong bounce this week, and then I'm trying to short the thing. February, March expiration. And I think you can short the S&P, you can short the QQQ, you could definitely short the small caps. And, for those of you in the options room, and then for those of you in my mastery, we'll be looking for slightly in the money call credit spreads. Really get a good premium, a good credit rather. We can also take into consideration some slightly out the money debit spreads, put debit spreads. But the key here right now is to work a good risk reward. Whether you sell calls, whether you buy puts, we need a bounce. A bounce would be awesome. Just in terms of catching a better move, but also in terms of options pricing. And if you're trying to buy puts on the S&P right now, if the market keeps rolling over, you're going to make money, but those puts are super jacked up right now. So premium is a bit chunky, and if you're trying to sell a call credit spread, there's no call premium left. But that is what I got for you here tonight, my friends. So I hope you found this helpful, and I don't think it's going to be a dull week this week. So keep in mind, bullish market, choppy market, or what I think we're going to have here, a market trending to the downside. And whether you're trying to do debit spreads, buying options, selling options, it's going to be a really important, in this market, you really want to think in terms of risk reward. So one thing I'm a huge advocate of right now is, like with our IWM trade, there's two things I think you really want to take the time to identify before you jump into the trade, which isn't always easy, especially when the market is, volatile and you're trying to catch these big moves. But I think two things you want to do before you jump into any trade, pick your target to the downside. So if you're shorting something, what's your downside target? More importantly, though, you got to pick your exit. Call it your line in the sand. So for me here on the IWM, our target was 200, and our exit, our line in the sand, was up here around 222. So you definitely want to identify your two targets, and then you want to make sure, playing with the Analyze tab, whether you're doing a debit spread or you're selling calls, you want to make sure that your profit down at your target exceeds your loss up there at your line in the sand. So we made about $115 per contract. Up at 222, we were only risking about $45 per contract. So a little bit better than a risk one to make two type of situation there. So keep those things in mind, right? The last year and a half, 2 years, we're waking up. We are sipping mimosas, buying some calls, running some scans, getting long, and life is good. And I think life's going to continue to be good. I'm excited right now. September, October, November, December, the market's been a chop fest, right? It has been difficult to trade. So I'm a believer that any kind of trend is easy to trade, uptrend or downtrend. So I'm kind of excited that potentially here we're getting out of the chop fest and we got some direction to work with. So for those of you in the options room, and especially for those of you in my mastery, be ready to put in some work here. There's times as traders where you got to be a little bit patient, and quite frankly, nobody likes to hear this. There's going to be times, especially as a swing trader, where, if you're flat, in terms of, you're not making money, you're not losing money, you're just kind of break even for a month, 2 months, 3 months, you might be doing a great job. You might be trading like a pro, just kind of protecting your capital some months. Then there's times you want to get aggressive, right? There's times where, in a matter of 4 to 8 to 12 weeks, you can make a majority of your gains of the year. In my opinion right now, unless something really changes, I think the next 2 months here really going to offer an opportunity for us to get aggressive and really make a better part of this year's money. So for those of you that trade with me over at Simpler, time to put some work in. I think we got some trend here, some direction, all beautiful stuff. So hope you enjoy the rest of your Sunday night. I'm going to go watch the rest of this Bills game here. My man Tom Brady knocked out of the playoffs. Let me know in the comments if you think Tom Brady's done. And also let me know in the comments if you found the video helpful. So, as always, I appreciate you watching. Please go ahead and hit the like button, hit subscribe, and keep in mind this coming Saturday, this Saturday, get the class coming up this Saturday. So, I know a lot of you have already signed up. Looking forward to spending a good 5 or so hours with you on Sunday. And then we'll have the live trade in the week after. So, looking forward to seeing all of you there. And for the rest of you, rest up. Big week ahead.